Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Tony Zhang, chief strategist at Options Play, for a review of the Nordics markets and option strategies to trade the trends. Tony, welcome back to Trade Talks. And the question is, are the pullbacks in the Nordic equity markets a buying opportunity? Let's take a look at the four major markets.
Yeah, exactly. So we've seen quite a bit of complacency from equity markets globally, not just here in Europe and in the US. But really, the question is, we're starting to get a bit of a pullback here in the equity markets. Is this a large enough of pullback for investors to step back in? So if we take a look at the OMX S30, the Stockholm 30 index, we've had a bit of a pullback here. It's about this 1950 level, which also corresponds to the late December, early December highs here. And this is certainly a support level for some investors to potentially step in. Now, there is a bit of complacency. We've started to see momentum no longer confirm these new moves higher. So that usually suggests that it's potentially time for a bit of a pullback here. We're at the support level. So for some investors who are looking to tiptoe back in, this is really, from a risk to reward perspective, a relatively attractive place to get in, because you have a fair amount of upside for investors who are looking to buy this dip, but also at the same time, you can cut your losses fairly quickly if it does blow through some of these support levels. And a major one to take a look at is the Copenhagen 25 index, which is by far the best performing index in the Nordics. Had a pretty big pullback here today, down almost 3% here, right down to the $1,600 support level, which has been a major resistance level pretty much since October for the Copenhagen index. So when you get a pullback this size, many times you get a small bounce here. So this is, again, from my perspective on a technical level, an attractive entry point for long opportunities. When we look at the Helsinki 25, also starting to outperform the Swedish markets, seeing quite a bit of outperformance here from Finland, pulling back here also to that 21-day moving average here today. So another support level, potential buying opportunity here. The one thing I will lay out here last with the Oslo 20 index is that this is the weakest out of all of the Nordic countries. The index has barely managed to break back above its 2020 earlier January highs. It's actually come back below those levels here. So this is the one that I'm a little bit more cautious about. We've seen a significant break below the 21-day moving average, and this is one that could potentially start correcting a little further. But for investors who are looking to get back in or are looking to potentially buy, we have seen a bit of a pullback here and provides a potentially attractive entry point.
How about economic data? Are you seeing improvement in some areas?
Yeah, so this is really one area where not only here in the US, but also in the Nordics, we're continuing to see economic recovery. So specifically, industrial production and manufacturing has been coming back online faster than services. And we're seeing this both in Sweden and in Norway, where industrial production continues to actually outpace surveys. In Sweden, it's actually back into expansion territory. In Norway, it's certainly recovering very fast, but it's still in contraction territory. But both of them are moving forward here, which is good. And this is really what we're trying to look for, is a combination of industrial and manufacturing coming back online, but also with services bouncing. So that's when we look at the economic recovery from an employment perspective. Swedish unemployment rate continues to tumble here. This is constructive for this, but what's really interesting here is that some of the growth that we're starting to see in employment is coming back from the services area. So services, restaurants, bars, these types of employment has been decimated by the pandemic. So when we're starting to see this recover back to those pre-pandemic levels, that's really the encouraging signs. And this is part of the thesis behind why there's economic support behind buying the dip that we're starting to see here in equity markets.
We have two bullish trades this afternoon. The first one in home appliances. Sounds like the home improvement trend is not just in the US.
Exactly. So, we continue to see home improvement and housing numbers being one of the bright spots from an economic numbers perspective. We talked about a home builder here on our last trade talk. So this time I want to talk a little bit about, when we talk about home construction, it's not just the home builders. We actually consider the appliance companies. So Electrolux is one of the major companies here in the Swedish markets, and recently just breaking out above that 200, 210 resistance level. So one of the ways that I'm looking to play this breakout here is to utilize options. And Partially, it's because markets are trading at all-time highs. You always want to be careful of potentially a larger pullback. So options allow us to take a bullish view going into this breakout, but do so in a way with limited risk. So here I'm going out to March and I'm buying the 215, 235 call spread here, paying about 650 crowns for a 20 crown wide debit spread here. So trading just here at about 3% of the underlying stock price to take a bullish bet on a breakout here for a name like Electrolux, which, as I said, when we look at the housing numbers, extremely strong and remaining very strong. These types of companies are the ones that are likely going to benefit.
And the second trade, our last trade for the day, is in paper products. I think that's a new one for us.
Yeah, so as a result of working from home and restaurants not having as much dining or indoor dining or dining in and doing a lot more delivery, there's been a lot more demand for paper products, for plastic products, packaging, for consumer goods as people need to ship things to their house as opposed to buying them in stores. So this is really one area of the market that's usually not on a lot of investors' radar. So paper products, BILL, interesting play here, breaking out above that 150, 155 resistance level, already getting that breakout, coming back to retest those levels as support, and I'm looking for a continuation higher here. So again, because these stocks are trading near all-time highs, the market is trading near all-time highs, I prefer to play these types of breakouts with limited risk strategies like a call spread here. So same thing, I'm going out to March. I'm buying the 155, 170 call spread here, paying about 550 crowns for a 15 crown wide credit spread. So paying about a third of that a third of that debit spread, but also only, again, risking about 3% of the stock price to take this bullish bet. And it's really designed to try to minimize your risk. So if we do get a larger pullback from equities, that I'm only risking 3% of the stock price to take this bet.
And finally, Tony, how can Nordic investors get in touch with you?
Yeah, so we have a fantastic relationship and partnership here with Nasdaq Nordic for investors who are looking for ideas like the ones that I presented to you here today, as well as the option strategies that I use so that you can look at them, analyze them, and explore them. You can have access to all of this completely free of charge, and you can sign up at optionsplay.se.
All right, Tony, great stuff as always. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.